Good morning, everyone. Welcome to the morning classes. And now mornings are more interesting. I'm sure at your place, winter has started. So, having a class early morning, getting up in time, and being ready for the class itself is a challenge. But that is the fun of all seasons. And I'm sure you all are also having the same fun, enjoying the winters, the early winters, right? Okay. So, yes, very good morning, Rajesh, Swaminathan, Ayush, Sanjay. Good morning, everyone. Now, the previous lecture was covering the types of duty and a very important topic on value on classification. Now, besides determining the duty rate, you are also called upon to do valuation. But before I start with valuation, as usual, let us try to go to some background. Because when you understand the background of any provision, wherever there is some history, in that case, understanding the present provisions, the nuances becomes easier. So, in case of customs, if you remember my previous class in which when I was explaining and discussing classification, I showed you the real WCO's classification schedule. I also showed you the customs tariff act, and we also went to the GST's present rate notification. Important to understand is when you compare different taxation laws, I'm only talking about indirect tax, the rates of duty given in the tariff schedule or the rate notification is expressed either as a percentage or per unit. Like if you remember our customs tariff act, which we saw in the previous class, in the unit column, you were given kg, 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 kg. It means the rate which is given is expressed or is uh, calculated per kg of that particular item. So, broadly, duty is expressed in two manners. Now, I'm presently talking about Customs Act in particular. One is on the basis of some physical quantity, which may be kg, which may be liter, which may be units, where duties are expressed are charged on the basis of some unit of measurement. Such duties are called as specific duties. Second is where the duties are charged as a percentage of value. In customs, you have both the methods. In GST, you only have presently one method. In excise, we had a third method also. I'll talk about that a bit later. So, the two methods of charging duty under customs is specific, where it is expressed as per kg, per liter, per unit, per centimeter. That is on the basis of some physical unit of measurement. Second is percentage of value, which is called as ad valorem duty. Now, ad valorem, this word is broken into two parts, where ad means on, valorem means value. So, when the term used is ad valorem, it means the duty rate is on value. Like how during school times in history, we studied Vasco da Gama. Now we thought it is the whole name of that person, where Vasco is the first name and Da Gama is the surname. Sorry, that is not correct. In older times, if you observe, the names included one, the names of the origin or the place. Two, the surnames were linked to the profession which the person was carrying. Three, the surname was linked to the social position which the person was holding. So our older naming culture in uh, primitive India plus the entire world was designed, especially the surname part, on these three lines, either representing the place from where you belong, or representing your profession, or representing your position in the society. So when it was Vasco da Gama, Gama is the name of the place from where this person belonged, and de means of. So da Gama means of Gama. So Vasco belonging to the place which is Gama. Similarly, ad velorum, where ad means on, velorum means value. Now, whenever the duty is to be computed on the basis of value, then only you require this chapter. Where the duty is expressed as a percentage, or where the duty is nil for the time being, you will not come to this chapter. However, when we talk about GST, in GST, you have to come to valuation every time. Reason being, GST rate is compulsorily on value. So there is no scope of any specific duty, at least as on date. Now, the third approach of computing duty, which was present in excise and which at a point of time was discussed to be introduced in GST but till now not introduced, is the method of computing duty on the basis of production capacity. This was proposed in GST for specific products like your pan masala, etc. But later on, that particular proposal was dropped. In this approach, which was there under excise, the duty rates were computed and expressed as per month per machine. So the rates had nothing to do with actual production, actual sale. If you have one machine, your per month duty liability, let us say, is 2,50,000, because the rate given in the Central Excise Tariff Act was 2,50,000 per month per machine. If you had 10 machines, your tax would be 2,50,000 into 10, that is 25 lakhs. That's it. No measuring your production, no measuring your sale, no need to check your stock, nothing. This was proposed in GST. Why you should know this? Because maybe today they have kept this thought process aside. But you never know. In future, wherever the law again feels, the lawmaker again feel that no, we need that method, they may go back to that method. So you should know that there is something like this called as duty on the basis of production capacity. Under the excise, this approach was referred to as compounded levy scheme. Sorry, or duty on the basis of production capacity. So remember this. If in future any times you have that in GST, so you'll know the linkage. Now coming to the topic of valuation. Again, understanding it comparatively with GST, so that you have a comparative understanding of both the laws. Both are part of your syllabus. So in case of GST, you have section 15(1)(5) dealing with valuation, where the valuation section says value can be determined on three bases. One, transaction value, subject to some conditions being satisfied. If not satisfied, then value as per valuation rules. And third, If the government wants, they can themselves fix up a value. In that case, valuation will be done taking that value, which is called as tariff value. So GST law provides for three different mechanisms of determining value. When you come to customs, the section is section 14 of the Customs Act. Interesting point is, in case of customs also you have a tariff value provision. So here also, if the law has provided that the government will fix up the value, you may trade at whatever price you want. Government is not interfering with your trade value. You can trade, your business can be at your determined price, but for the purpose of valuation, for determining the amount of duty that you have to pay, the value will be determined by the government and you have to apply that value only, specifically only when you are computing the customs duty. This is the valuation as per tariff value provisions. So this is common with GST, that there is again a tariff value provision over here. In fact, under customs, you will find that tariff value has in practical more application as compared to GST. That is to say, under GST, very rarely tariff values are fixed by the government. Exception is one or two products. In customs, for many products, the government has fixed up tariff value. Now, the next part is different between GST and customs. What is the next part? So first part was tariff value, which is provision exists in both the laws. Second part is, in GST law, the approach or mechanism is, you first check whether or not you have satisfied the provisions or the conditions relating to transaction value. If satisfied, you will take the transaction value only. You will not go to the valuation rules. This is in case of GST. In case of customs, again you have a transaction value. Again you have different values as per valuation rules. But the point is, in customs, you compulsorily go to the custom valuation rules. So in GST, going to GST valuation rule is dependent on whether or not you satisfy the condition of transaction value. If not satisfied, then only you go to GST valuation rules. Otherwise, you'll never refer the rules. In customs, the section 14, which is the valuation section, is so drafted that you have to compulsorily go to the valuation rules. And there are two valuation rules: valuation for imported goods, valuation for exported goods. You have to compulsorily go to the valuation. And in fact, in the valuation rule also, the first rule for valuation is talking about transaction value again. It is saying that you will determine the value as per your transaction value. It means the difference between GST valuation and custom valuation is, for customs, you have to compulsorily go to valuation rule in all cases. And the transaction value will be determined as per valuation rule also. And if not, if the conditions of transaction value are not met, then the valuation rule only, after rejecting the transaction value, gives you the other values which you have to proceed sequentially. I hope this broad background about valuation under customs is clear. If anybody of you wants to ask anything before we proceed, you may feel free to raise your question. Anybody wants to ask anything on this? No? Okay. So what are we going to study? First, the valuation section, then compulsorily the valuation rules, both for imported goods, for export goods. Then the relevant date for determining the rate of duty, the tariff valuation, and some special provisions for valuation. So these are the things that we are going to cover. Major part is this only, valuation section and valuation rules for imported goods. Once you understand imported goods rules, which are very vast, export valuation rules are comparatively easier. So as you can see, There are two rates, or two, not rates, two approaches. Specific duty, which is charged or computed on the basis of quantity, and ad valorem, which is computed or expressed as a percentage of value. Then you have two types of values. One is the transaction value, one is the tariff value. Here they have not separately given the valuation rule reference. Why? Because as I said here, going to valuation rule is compulsory. In fact, valuation rule also first ask you to take the transaction value only as the value. Okay. Now, one thing again I'll repeat. Many times we get a misconception about tariff value, that when a tariff value is fixed, your business also happens at the tariff value. Answer is no. Your business will continue to happen at your value, whatever you have negotiated and fixed with your supplier or buyer. Tariff values are only limited for the purpose of valuation for computing the rate, computing the duty amount. It has nothing to do with your business. Importantly, what is transaction value? This we discussed in GST valuation also, but I'll repeat because many times it appears to be a technical term. Answer is no. It is a very basic common usage term. Transaction value, or just read it like this, transactions value, means when you have done import, it is a transaction, it is a business transaction. When you have done a business transaction, definitely this transaction would be at some price. You have negotiated some price with your counterpart who's sitting outside, and on that price you all are going to execute this particular transaction. The price at which you are going to import goods or export goods, the price which you have fixed, negotiated with your counterpart sitting outside, that is the transaction value. So there is nothing technical in this. It is a simple, straightforward, generic concept that it is the value of the transaction, the value at which you are doing this import or export transaction. That is transaction value. Now, before we proceed with determining the valuation under customs law, we need to understand some terminologies used in international trade. So whenever I am negotiating a price with my counterpart in international trade, the price which we negotiate could be one of these. Either my price would be called as an ex factory price, or if it is, or it may be the FAS price, or the FOB price, or the CIF price. Now, what it means, let us understand. Let us say I am importing a machinery from the supplier sitting in Germany's one of the industrial areas. Now, from industrial area where the person's unit is located, he has to send goods firstly to the German port, which may be any distance from his factory. So the goods have to be first sent to the German port, from where they would be loaded in the ship. I'm assuming we are transporting by vessel. If it is by air, he has to shift it to the, or he has to dispatch the goods to the German airport, from where it would be loaded in some commercial plane and it would come to India. So first point is his factory located somewhere inside the German industrial area, wherever it may be, in different cities of Germany. From there, the first leg is bringing it to the German port airport from where goods are exported from Germany. Second leg is from German port to Indian port. Again, for simplicity of example, we are assuming the Indian port where these goods will come is Bombay port, both sea and air. Third leg is my factory in India. Let us say my factory is in some interior place of Rajasthan where I am having my unit. So there are three legs in which the goods will reach me ultimately. What are these prices? You have to understand it from these three checkpoints or these three identifiable points. First point is German person's factory. Second is German port. Third is Indian port. And finally, it is my factory. So three transport legs, and these are four different identifiable points. Now, what is the X factory price? Generally, this is not used in international transport, but for example, the price quoted is 1 lakh USD, but he says this price is X factory. What is X factory? X factory is that he is quoting the price up to his factory gate only. That is the very first point, which also means that all expenses after his factory gate, like the first leg of transport from his factory to the German port, second leg German port to Indian port, and third leg Indian port to my factory, nothing is included in this price. All these expenses would be extra. And obviously, it would be my burden because his burden is or his responsibility is up to his factory gate. That is what is the X factory price. So it will include cost of production, manufacturer's margin of profit without cost of freight for outward delivery. Correct? Then comes the second, third, and fourth prices, which are commonly used in international transport. FAS, full form is free alongside. It is the cost at which the export goods are delivered by the seller to the port of shipment, but not on the board. And FOB is the stage at which the goods are placed on board the vessel at the port of shipment. Now, both are very similar with some difference. What is this? So, first is he has quoted the price which is X factory. But many times I'm not interested in that because I will have to then all arrange, manage the transport from his factory to his port, which is very difficult for me because I cannot go to Germany for bringing the machine. So many times the price used is either second or third. What is the second price? He says that I'm charging $1,15,000 for my machine. And this price is FAS price. Means what? He will send the machine from his factory to the German port. So the machine up to German port is his responsibility. My responsibility will start thereafter. At German port, he will only send it to the port. He will not arrange for loading it on the ship. So up to German port, he is taking care of. Thereafter, I have to take care of. That is FAS. And what will be FOB? Up till loading the goods on the ship. Till that point, expenses are borne by him. It is his responsibility. So my responsibility will start from transporting from German port to Indian port and also further. But up to loading on the ship, it is his responsibility. So difference between the second and the third price is very margin, because in second price he has brought the goods up to the German port but not taken responsibility of loading it on ship. That I will have to arrange. In third, he will even load the goods on the ship, that is he will complete all the formalities. Now the further cost, that is of bringing it to Indian port, is mine. That is the difference between FAS and FOB. And then CIF is the price where he is also bearing the cost from his port to the Indian port, that is CIF is the price of getting the goods at Indian port. That is why the word uses cost, insurance, freight. So cost is the cost of his goods, and insurance and freight are the transport related expenses which are incurred until the goods reach Indian ports or the ship reaches Indian ports. So these are the four types of prices, out of which generally second, third, fourth are commonly used. Majorly second and third is used in international transaction. Majoritarily third is used. So first is very rarely used. Fourth is used, but 50-50. Second and third are used majority times, out of which also majority times it is the third price, that is the FOB. Any questions up to this point? Any of these concepts not clear? Now these are the prices, students, in which international trade happens. So this is just for your information. We have our own valuation under customs and you have to follow that. These prices will only help you in understanding the custom valuation better. And yes, these are all transaction values because these are the prices which is fixed between you and your counterpart to do this transaction of import export. Fine. Now, I'll request someone to help me in reading. Can someone help me in reading? Because I will need to read the provisions and some parts in detail. So if somebody can help me, it would be better for me. Yes.
In case of export goods.
1 second, sorry. Rajesh, you are reading. Please read it from here.
Okay. Subsection 1 lays down that for the purposes of the Customs Tariff Act 1975 or any other law for the time being in force, the value of the imported goods and export goods shall be the transaction value of such goods.
Okay. Now 2 points to be understood from here. Now this point you will find interesting, students, specifically in customs law, that everywhere they always refer this part. If you remember, we had this in charging section also, and you will find this paragraph, this phrase in multiple provisions. What is this phrase? Or any other law for the time being in force. So everywhere, including the charging section, the customs law is always referring to other laws also. Why? I repeat my first lecture point, that customs is also acting as a single window system. What is single window system? Single window system is that it will also be collecting taxes on behalf of other laws. Now, since it is going to be collecting taxes on behalf of other laws, that is why it is everywhere referring to or any other law for the time being in force. This is point number 1. Point number 2 is, right now we are talking about subsection 1, same like GST valuation. Subsection 1 says, ki boss, firstly, the value that we would like to take is the transaction value only. And then later on in other subsection, it says that where government has fixed a tariff value, we will take that tariff value. But otherwise, we want you to take the transaction value only, because see, the logic is, I want to charge tax on your real price. I do not want to take any artificial tariff value. That is my last resort when I find that there is a lot of tax evasion, there is a lot of manipulation. For those goods, I have fixed a tariff value. Otherwise, I am more happy taking your transaction value. Now comes the most important part. What is this transaction value under customs? Or I should say, what are the principles under customs for fixing this transaction value? That is discussed henceforth in this subsection 1. Yes, Rajesh, please.
In case of export of goods, the transaction value shall be the price actually paid or payable for the goods. When sold for export from India, for delivery at the time and place of exportation, where the buyer and seller of the goods are not related, and price is the sole consideration for the sale. However, further conditions may be specified in the rules made in this behalf.
So here they
In
are
case
trying
of
to explain you what will be the value, the transaction value, that will be taken whenever you are exporting goods. Instead of explaining this, I'll be explaining the second point where they are going to talk about import valuation, because all the points are same in both, and mainly for all our practical purposes and exam purposes, it will be the import valuation that we'll be doing. So all the other points are covered here also. So I'll explain this. Please read, Rajesh.
Okay. In case of imported goods, the transaction value shall be the price actually paid or payable for the goods when sold for export to India for delivery at the time and place of importation, where the buyer and seller of the goods are not related, and price is the sole consideration for the sale.
Okay. Now, same 4 points are there above also. And most importantly, here also it says that, however, in this case also, further conditions may be specified in the rules. And that is what I mentioned at the start. The difference between custom valuation and the difference between GST valuation is, custom valuation is asking you to take value as the transaction value only. But for this, you have to still compulsorily go to the valuation rule, because the valuation rule is making more conditions, more prescription relating to the transaction value itself. Now, before we go to valuation rule, there is something provided in the act itself which is giving you more details about what would be this transaction value. There are 4 points given. First is, what is the transaction value? As I was explaining some time back, transaction value is nothing but your value at which you and your counterpart sitting outside India have negotiated and finalized this transaction. So it is the real price fixed between you and your counterpart. That is what is firstly the meaning of transaction value, that it is the price actually fixed between you and the person, which may be paid in advance, which may be payable in future. That depends upon your commercial terms. What is very important is the first condition, how has to be the value. Now, this condition you have to understand, because this will reflect when we proceed further, and it will also be part of some of the objective questions that we are going to face in the exams. Just a second, hold on. I'll switch to the charger. Now, this part which I have highlighted is very important. From here starts the real meaning, and I will say the real ingredients of transaction value when we are talking about customs. So first, it is your actual price, fine. What is very important is this part. We will take only that price which is firstly an international transaction price. Secondly, it is a price when a person sitting outside is sending goods to India. Please read this underlined point again. What it says, what is the price? It is the price when goods are sold for export to India. I will say, sir, so what is so special? Few implications you can draw from this one para, this one phrase. What is that? You cannot take domestic prices as the prices or the values under customs. See, these goods, in my example, a German manufacturer manufacturing machine I am importing into India. So there would be definitely the price at which, the domestic price at which these goods are sold in Germany itself. Secondly, there would be some domestic price at which these goods are further traded after being imported in India. I will never consider any of the country's domestic prices. Point number one. So The first implication of this is domestic prices cannot be considered for custom valuation. Point number two, the same manufacturer from whom I am importing these machines may be supplying the machines to multiple other buyers sitting in different countries. So that manufacturer is also selling goods to person in Bangladesh, is also selling goods to person in Sri Lanka, Japan, etc. I will not take any other country's export price. I will take the price at which he has exported goods to India. That is, I have imported in India. See, don't get confused by the word export. It is from the side of the seller. We are doing our import valuation. So we have to take international price, that also for transaction between that country and India, not that country and any other country. So two important implications from this one phrase. Then comes the second important, and according to me, the most important requirement. When you will go further in the rules and whatever we'll study, the practical part and the calculation part, this point is going to be very, very crucial. What it says, for the purpose of custom valuation, the value or the price that we are going to take should be a price which is for delivering the goods at the place of importation. What it says, delivery at the time and place of importation means what? Where is the place of importation? Place of importation is India. What is this place of importation? In my example, it is the Bombay port because these goods are landing at the Bombay port. So please understand the meaning of this place of importation. It is the place where these goods are landing in India. In my example, the goods will be landing at the Bombay port. So first understand, place of importation is Bombay port. Now, what is the condition? The law requires that you should take a value, you should determine a value, which is a price till the goods reach India. It means when we'll proceed with the valuation provisions, the rules, and all the workings, you will find out that within the law, they have made a provision that you have to include all those expenses which will be incurred on these goods, on this import, till it reaches India. Now, I go back to this point. We have so many prices that may be quoted by my supplier in this international trade. And as I said, the most common one is FOB. Now, just for example, he has quoted me a price of FOB $1,20,000. Whether this price is a transaction value, answer is yes. Second condition, is it for export to India? Answer is yes. So I satisfy the first two conditions embedded in the first point. But is this the price for export of goods to the place of importation? Answer is no. So the present point which we are discussing is not satisfied by this price. But since we have to take the transaction value, I'll take this FOB price given or fixed by my supplier. But then the rules provide that since I want the price up to the place of importation as per the section, the rules say that, okay, fine, no problem. You add these costs. Now tell me, without, you all have not read the rules yet, tell me what could be those costs that the rules are asking me to add to satisfy this present condition of the act which we are discussing? Can anybody tell me? See, you have to uh, evaluate the law without even reading the law. You can just make your own visualization and understanding as to what would be the condition. Very good, Geet.
Freight charges, sir.
Excellent. Perfect. See, this is how you should read the law. So even before going to the provisions, if you are able to comprehend it yourself, then reading and understanding the provisions would be very easy and fun. So when you understand this condition which we are discussing right now, that the price should be such that it is for delivery at the time and place of, sorry, this is exportation. This is if I'm fixing export price. But as I said, we are discussing on the import side more because all our practically also and sums also will be on the import side. So I want to fix up a price which is such that it is for delivery at the time and place of importation. Yes, Ayush, will be coming to that. So you will first see what is the price of the supplier. In my example, it is the FOB price. Is it satisfying this condition? Answer is no. So when you will check the rules have provided as to what should be added to make it the price at the time and place of importation. Now, what is the relevance of this at the time of importation? That also you will realize as we proceed. When we come to a particular point in the rules, I will come back to this provision and I will make it highlighted that the condition given in the law itself is the price should be at the time of importation. What it means that we'll discuss later. Right now, I am emphasizing more on the price which should be at the place of importation. So it will cover all those costs. Then another requirement is the buyer and seller are not related. Now, this is the same requirement you find even in GST. Why? See, when I'm relying on your price, I'm ready to take the transaction value. Then I want that the value should be honestly mentioned and disclosed. Now, where there is a possibility of the element of dishonesty coming in or some manipulation coming in, where you both are connected, in that case only you both can internally decide to fix up a price which is different, and what you are showing on all the documents that you have prepared will be different. So in order to avoid that type of manipulation possibility, they have put a condition that the buyer and seller should not be related. Now, same condition is in GST, same condition is here. The definition of buyer and seller under GST and customs are parallelly very much similar, but an interesting point. In GST, if the buyer and seller are related, you drop the transaction value, you go to the valuation rules and compulsorily take the valuation rule value only. However, under customs, when we proceed, you'll find that the rules provide that even if the buyer and seller are related, you may still continue with the price subject to some more conditions. So under customs, first condition is you should not be related. But the second part says, even if related, we are ready to accept your price. And then comes the third main condition, or you can say the fourth main condition, that the price should be complete. Again, this is common in GST law also. What is this complete? It says the price is the sole consideration for this transaction. Means what? What do you mean by sole consideration? Sole consideration means that whatever price you are mentioning on your documents, besides that, there should be no other benefit, there should be no other consideration which the supplier is getting from the buyer. In this case, the German machine manufacturer should not be getting anything in extra from me, that is the Indian importer. If there is any other benefit flowing to this German supplier, then this condition requires that we add the value of those benefits also. And how that may be added, all that is provided in the rules. So that is why in customs, you have to compulsorily go to the rules, because for all these conditions embedded in the act has not given what to do, how to do. For everything, you will be getting the answer in the rules. That is why in customs, you have to compulsorily go to the rules, and that is what is provided from here onwards. Yes, Rajesh, you may read from here.
However, in this case also, further conditions may be specified in the rules made in this behalf. Such transaction value shall also include, in addition to the price as aforesaid, any amount paid or payable for costs and services, including
One second.
commissions and
One
brokerage.
second. One second. So first part is there could be more conditions. So we have already given few conditions here. that the price should be such that it is international price for sale to India. Then it should be at the time and place. Buyer should not be related, and price should be sole consideration. So four conditions are embedded in the act, but the act itself says few more conditions are there in the rules. You satisfy them also, then only your transaction value will be accepted. And further, here you will find that it says that besides the above transaction value, there could be some more cost and services for which we want you to include it in addition to the transaction value. Now, why to include these costs and service? Just to satisfy both these conditions. What? I want the price which is at the place of importation, plus I want the price which results into a complete price. But if your price mentioned is not complete, let me add some more expenses which are part of this transaction, may not be included in the price. So that is what is the point which Rajesh was reading, that such
So,
transaction value shall also include, in addition to the price, the amount paid or payable for following expenses. So all these following expenses will also be required to be added if they are incurred separately besides the price. And why all this? To match both these conditions. First, I want the value up to the place of importation. Second, I want to ensure that this is a complete price. In case it is not, make addition of all this to make it complete. And exactly this list, when we go to the rules, there is a rule 10, which is the most important rule in the entire custom valuation. Rule 10 is providing you that all these things should be added, how it is to be added, how much it has to be added, everything you will get details in the rules. Yes, Rajesh.
commissions and brokerage, engineering, design work, royalties and license fees, costs of transportation to the place of importation, insurance, loading, unloading, and handling charges to the extent and in the manner specified in the rules made in this behalf.
So all these expenses are to be added. Why? Keep in mind to comply with the two requirements, that the price should be up to the place of importation and it should be the sole consideration. Now, how much to be added?
To
In
the
what
extent of
amount?
the
Everything specified in the rules that we will be going to. Now it further says, so one rules will be giving you additional conditions, two rules will be giving you what and how much to be added. Now third, what else the rules is giving you? Please read.
Such rules may provide for the circumstances in which the buyer and the seller shall be deemed to be related,
So it will give you definition of related person. Next.
the manner of determination of value in respect of goods when there is no sale or the buyer and the seller are related or price is not the sole consideration for the sale or in any other case.
Second, what the rules will provide in case any of the above condition fails. Now, if any of the above condition fails, your transaction value will be rejected. Then how the valuation will be fixed? That will be fixed again by the rules. So the rule will provide for fixing your value. When? When any of the above conditions are not present. What is not present? First, there is no sale itself. Now, please understand, students, if there is no sale, how will there be a price? Now you will say, sir, but if there is no sale, why there will be tax? Please understand. Now here I am going to mention one very important aspect about the customs. Again, comparing it with GST, because these are the two present laws in India, majorly for indirect tax, and these are also part of your syllabus. Please understand the students, GST is applicable on supply, and supply will be sale, barter, etc. So by default, please keep this in mind what I'm explaining in next 5 minutes. It is very important for the GST law also. GST law will apply only when there are two persons, because for attracting GST, there has to be a supply, and for anything to be a supply, there has to be two persons. You cannot make a sale, a barter, a transfer, a leasing, a hiring with yourself. It has to be some other person. Correct? No such requirement is there in customs, or it wasn't there even in excise. So interestingly, customs and excise are such laws which does not require two persons, which does not require there to be a transaction of sale, barter, exchange, anything. I'll give you now example of this in particular with relation to customs. So I have gone outside India. I have done lot of shopping over there. Now I'm coming back to India. Now when I'm bringing these goods to India, it is me only who is the person who had purchased this outside. So I am only sending the goods from outside to myself in India, or I am carrying the goods along with me when I'm coming to India. In any case, there are no two persons. It is my own goods which either I am sending from outside India to India or I am carrying it along with me. Customs has nothing to do with this. So if you remember the customs charging section, section 12, it simply said goods imported into India. So levy is on what? Import of goods in India. It has nothing to do that there has to be a sale, barter, exchange, etc. Similarly, if you are sending your goods outside for exhibition, that also attracts custom duty. And when these goods are brought back after exhibition, it still attracts custom duty. Why? Because custom has nothing to do with there being a sale or there being two persons. But since we do not want to charge custom duty in such cases, that is why we studied in the first chapter special circumstances of levy. In that we studied section 20, which deals with goods re-imported into India. And in that we had notifications which gave relief to these transactions. Had there been no section 20 and the relevant notifications, these transactions would have become taxable. When we will proceed in this subject of customs, there will be a chapter on baggage. Baggage is what? Your own luggage. Importantly, your own luggage, which you are carrying along with you, may also become leviable to customs duty. Why I am using the word may? Because when we'll go to that chapter, you will find some monetary limits fixed. If you are bringing goods beyond the monetary limits, there is customs duty. So interestingly, your own luggage, which you are carrying, which is for your own use, may also be leviable to customs duty. This is the extent of levy or extent of application of customs. Why? Again, read the charging section. Customs nowhere says that it should be somebody else's goods. It should be somebody else who is sending the goods. It simply says goods imported into India. Full stop. So you may be bringing goods. It may be belonging to you. You are yourself carrying it. We have nothing to do. Once goods are entering into India, it becomes import, customs apply. So I am coming back to this point. So where there is no sale, it may be your own goods which you are bringing into India, but I am levying customs. And if I am levying customs, I need value. But since there is no two persons, there is no transaction value, how will the value be fixed? Rules will determine. Second, how will the value be fixed if buyer and seller are related? Because I have already said, I'll define what is relationship between buyer and seller. And I have already mentioned that I may reject the transaction value. Now, if transaction value is rejected, you need to fix up a value to compute duty. Again, rules will provide how to fix a value in this case. Further, if this condition is not satisfied, that price is sole consideration. If that is not satisfied, how valuation will be done? Will provide. Or in any other case. What is this any other case? We saw above that rules will provide for more conditions. If any of the conditions are not satisfied, the rules only will provide how to determine the value. In simple words, rules are obligatory part of custom valuation. Everything, condition, then further giving valuation in different scenarios, giving definitions, how and to what extent any expense to be added, everything you will find in rules. So rules will provide for one, definition of buyer-seller relation. Second, how to fix values in all these scenarios where your transaction value will not be accepted. Please proceed.
Such rules may provide for the manner of acceptance or rejection of value declared by the importer or exporter, as the case may be, where the proper officer has reason to doubt the truth or accuracy of such value and determination of value for the purpose of this section.
In the rules provide one very important thing. What is that? The rules have empowered the officer to do what? To reject the value that you all have declared. Now see, when import or export is happening, you only declare, sir, see, these are my documents. What is written in the document? That this machinery costs 1,20,000 USD. That's it. So you are always informing them. You are declaring them the value. Now, in case of customs, there is lot of manipulation that happens, both in terms of quantity, in terms of value. Now, here we are talking about value. So wherever the custom officer doubts, it is given further that the custom officer has doubt about what? The truth or accuracy of the value which you are disclosing or declaring. Again, in rules, you will find rule 12 of the custom valuation rules. I'm talking about import valuation. And same you'll find in export valuation. If over there, I think it is rule number 8. The customs officer are empowered to outrightly reject your transaction value. So despite of you satisfying all the conditions that we are reading, and we will be further reading in rules, still the rules empower the custom officer to reject your value wherever they doubt. This is also interesting. They are saying even if they have doubt about the truth, they can reject. So see, to this extent, the custom valuation is very stringent. And that is why in my last lecture, if you remember, I had mentioned that many professionals, especially we chartered accountants, are practicing in the domain of classification, where we are doing nothing but classification. So you'll find such offices across India who are only doing one area of practice, that is classification, because that in itself is a huge subject. Similarly, I've even found few chartered accountants, professionals who are only practicing in this one topic, that is valuation. Why? Because again, valuation has so many aspects, and determining value will be studying here very academically and very in a very watertight compartment, very simple examples. But in reality, doing that is a very challenging thing, and that is what is the fun, and that is where the entire practice and the revenue comes from. So this point says that officer has the power to deny, to reject whatever you have declared, and in that case again the value will be fixed by the valuation rules. Please.
The additional obligations of the importer in respect of any class of imported goods and the checks to be exercised, including the circumstances and manner of exercising thereof, as the board may specify, where the board has reason to believe that the value of such goods may not be declared truthfully or accurately, having regard to the trend of declared value of such goods or any other relevant criteria.
So what is this? Now actually this is connected with the above point. Now in above point we saw that the officer is given power to reject. Now we understand, I'm sure you all would be understanding this, that when any authority is given such a huge power, the power will be misused. And it was being misused. Hence, very recently, as you can see here, very recently in 2023, the CBIAC, that is the board, the governing board of our indirect tax, came up with a set of rules. What are these set of rules? Now, these set of rules provide the procedure, the manner in which the custom officer will use his power. What is the power? The power to accept or reject your value. But in doing that, first these rules will come into picture. So what it has said in this regard, custom assistance in value declaration identified imported goods rules have been issued, which aim to address issues of undervaluation in import. So see, there is manipulation. I agree. A lot of manipulation happens because everybody wants not to pay the full duty so that they have that much extra margin in their business. So importers are manipulating, but at the same time, giving a very open-ended power to the officer to reject only on the basis of doubt is also equally very dangerous provision. So to balance it, they have made these rules whereby now they have put some obligation on the importer of specific goods. What are these goods? These are the goods where mainly all these manipulations happen. So for those specific goods, these rules have been given where they have put additional obligation. What is the additional obligation? That the importer is required to follow. And if the importer is following them, then besides that, also, if doubt persists about the declared value, then the matter will be resolved as per Rule 12 of the valuation rule. That is, the officer will have the power to reject. But now, before rejection, all these things have to be complied with. So first, the importer is put additional obligation, and if importer does that, then rejecting will be difficult for the officer. So before applying these rules, the board must thoroughly examine the report from the screening and evaluation committees. Exception to these rules include duty exempt imports. So where the duty itself is exempted, no need to follow any of the above rules and obligation. Why? Because there won't be any duty. So even if you are manipulating the value, we are okay with that, right? Now comes relevant date part. So this part is very important, students, for the purpose of exams. Now, again, I will link it with GST. In GST, we have the concept of time of supply. What is time of supply in GST? Time of supply in GST is the date on which your liability, you can say, is attracted, or in other words, the date on which you become liable to pay the tax. So please distinguish the students. There are two dates. The date on which your levy is created, that is, the tax becomes applicable to you. Second, the date on which this levy, this liability is finally, you can say, concluded, or the date on which the law says, boss, on this date you have to pay the tax. Now, importantly, in GST, this time of supply is only for deciding one thing, that is the rate of GST. So the month in which the time of supply falls as per section 12 or 13 of the CGST Act, in that month, you have to go and discharge the GST. This is what is time of supply under GST. Under customs, this time of supply is more extended. How it is more extended? In customs, you have to determine the timing twice. Or I should say, you have to determine the timing for two different things. What are those two different things? One, same like GST, here also you have to determine on which date I will be determining the customs duty amount. So for fixing the duty, you have to fix one date, that is on this date, I will be computing the customs duty. Second, the other date which is also relevant is the date of which I will take the currency exchange rate or conversion rate, because all international transactions will happen in foreign currency, and foreign currency, you know, is fluctuating every day, the exchange rates. So again, we'll have to fix up a date on which we will be taking the exchange rate. So two dates, date for rate of custom duty, date for foreign currency exchange rate. And both these dates are provided in different sections, and both these dates can be different. Student, just give me 2 minutes. Yeah. Now, what are these two dates? First date, which is the date relating to the customs duty rate determination, that is provided in section 15 of the Customs Act, which we studied in the previous chapter. I'll just reiterate what we studied. So when you want to determine the customs duty rate, what is the date for determining the custom duty rate? So it says where the goods are imported and cleared by you immediately, you will take the date on which you filed the bill of entry, which is the application for clearing your goods, or the date on which the ship was granted the entry inward permission. Out of these dates, whichever is later first. So which date? Now this I am talking about not for exchange rate, which is the point here. I'm just revising what we studied in the previous chapters. Date for fixing the custom duty rate. Which date's custom duty rate you have to apply? That is given in section 15, which is later of the two dates. One, on which you filed the bill of entry for clearing the goods for home consumption, or the date on which the ship was granted entry inward permission, whichever is later. Second, after import, you had not cleared the goods immediately, but you had cleared it for keeping it in warehouse. And now the goods are lying in the warehouse, which may be exactly next to your factory in the same city limits where your factory is. Now, after keeping the goods in warehouse for, let us say, 6 months, now when you need the goods, now you are filing the bill of entry for home clearance. Now, when you are filing the bill of entry for home clearance now, in this case, again, what is the relevant date for the rate of customs duty? It is the date of filing the second bill of entry. First bill of entry was for clearing it or removing it from port and shifting it to warehouse. And then for removing it and clearing it from warehouse, you filed the second bill of entry. This second bill of entry date, only this date, is the date of which you take the custom duty rate. Now, all this is provided in section 15. What we are discussing here is section 14. We are studying section 14 only, which is the valuation section. And in this section itself, they have provided for the date on which you will be deciding the currency exchange rate. So you have, like in my example, I have imported this machinery for 1,20,000 USD. Now I want to compute the customs duty, so I'll have to convert this USD into Indian rupees. But for conversion, which date's exchange rate I will take and whose exchange rate I will take? So two questions are answered here: whose rate and which date's rate. Here what is very important is date for customs duty as per 15 and date for exchange rate, which is here in section 14, can be different. Over there, as I said, two situations: clearance immediately or clearance of warehouse goods. For both, the dates have been given. Here, for all transactions, the date for determining the foreign currency exchange rate is only one date. That is the date on which you filed your first bill of entry. So when the goods were imported, even if I'm warehousing the goods or I'm clearing it immediately, I have to file the first bill of entry. If I'm clearing it immediately, that is done. If I'm keeping it in warehouse, then again I file the second bill of entry for clearing from warehouse. In any of these scenarios, the rate of exchange, foreign currency, will be always the first bill of entry only. So only one date and no later, earlier, nothing. Similarly, for export goods, it is the date on which you have filed shipping bill or the bill of export. So see, both these are shipping bill in case of export and bill of entry in case of import. Both these we'll study in detail in the procedural chapter. For the time being, you have to only understand this, that whenever you have to import or export, you have to make an application to the customs seeking their permission. Only when they process this and give you the permission or order, only then your goods will be imported, that is cleared and brought into India, or exported and cleared and sent outside India. For seeking this permission, these are the applications. Bill of entry for import, bill of export for export. Important is the date of filing the bill of entry, the date of filing the shipping bill is the date for foreign currency exchange rate. Full stop. Transaction may be of any nature. Exchange rate will always be only one date. I hope this is clear. Second question, whose exchange rate? Because exchange rate is available in stock market, exchange rate is available with all the money changers, exchange rate is available with banks, and different banks may have some paise difference in their exchange rate, because now it is a trade, it is a business. So it is everybody's prerogative what exchange rate they want to fix, and it is our choice from where we want to get our currency exchange. Now, when you have multiple exchange rates, the question is, for the purpose of customs valuation, when I need to convert the uh, machinery value, which is in dollars, to rupees, so that I can compute the customs duty, which will be computed and they're paid in rupees only. What is the exchange rate, or I mean to say, whose exchange rate? So here, the answer is given under section 14 again. It says that the exchange rate for the purpose of custom valuation will always be the exchange rate as fixed by the board. So either CBIC itself will give its own exchange rate, or it will give the manner in which you have to ascertain this exchange rate. So the manner would be, they will say that, okay, you take RBI's exchange rate. So they will either give you the manner, or they will themselves give you the rate. Now here there is something just for your information purpose. Board notifies the exchange rate twice a month. So in every month, on every first and third Thursday, the board will give you its exchange rate. So till date, I have seen that it is always given by the CBIC only. Yes, there were exceptional scenarios for which, for some reason, CBIC could not give. So for those periods, they have said that, okay, you take RBI's exchange rate. But otherwise, exchange rates are given by CBIC. Now, what else you get to understand from here? That exchange rate may be fluctuating daily, but CBIC is giving you these dates only twice in a month. So for the first 15 days, that is what we call as fortnight, it will be the date first Thursday. For the next fortnight, that is next 15 days of the month, the date will be given on the third Thursday. So the date given on that day will be applicable for 15 days. Another date will be for next 15 days. So irrespective of what is the real exchange rate in the market, for the purpose of our custom valuation, when we are converting the dollar to rupees or dirham or euro to rupees, you will be taking the exchange rate given by the CBIC, and that would be one rate applicable for 15 days. I hope this is clear to everyone. Then comes tariff value. Subsection 2 of 14 simply says that for few specific cases, the government may like to ignore all the valuation rules, discard all the valuation provisions, and instead give its own value. Where any such values are given by the government, then this section, that is 14.2, supersedes all other sections, that is 14.1. In other words, you will not go to transaction value, you will only take the tariff value. So tariff value is the value fixed by the government, and wherever it is fixed, then entire subsection 1 and all the valuation rules will be discarded. You will take this value, that's it. Now, once you have understood section 14, now we go to understanding the valuation rules in detail. Now we are going to study the import valuation rules and the export valuation rules. But whatever you study in import valuation rules, that is what is very crucial, because export valuation rule is virtually copy paste of import valuation rules. Now, import valuation rule, rule 1, we always know what is rule 1 or section 1. It is always the title, commencement, etc. And then the main part starts from 2. Again, generally, section 2 or rule 2 again always covers definitions. And then from rule 3 onwards, we have valuation rules. Now, rule 3 says that value will be your transaction value, and it has put some additional conditions, which was already mentioned in the act, that some additional conditions will be given over here. Plus, it has given you special circumstances. Everything is given in rule 3, but basically rule 3 is talking about transaction value. Then, if your transaction value is not accepted because any of the conditions are satisfied of the act or of the rules, then how to determine the value? The values other than your transaction value are given in the other rules. So from rule 4 to 9, you are given the values which you have to adopt in case your main value, your transaction value, fails. Now, what are these values? Now, rule 3 was take value of your goods, which we call as transaction value. If that cannot be taken, second is you take value of identical goods. What are identical? We'll see the definition, but for the time being, it is your same goods but imported by somebody else. If that value is also not available, take the value of similar goods. What is similar goods? Goods which are not the same like your goods but very close to your goods, like how we say competitive goods. So I can buy Natraj pencil or I can buy Camlin pencil. Camlin and Natraj both are similar goods, and Natraj both are identical goods. So if my value fails, you will take value of same Natraj pencil but imported by someone else. If that is not available, you will take value of Camlin pencil, obviously imported by someone else. If that is also not available, then there are two mathematical methods given: deductive value, computed value. You will compute the value by one of these mathematical methods, and when none of these rules are possible, you will go to a best judgment method, which is called as residual method. There is nothing given in this rule. It simply says you apply the other rules harmoniously. So what above you studied, you take the logics from there and try to apply it harmoniously, but there is no mechanism. So that is, this last rule is the open-ended rule. That is why I'm calling it as the best judgment method. Law has not given this answer, but this is how we apply this rule practically. Now, what is important, as I said earlier also, is rule 10, because you have to add many expenses. Why? Because we want to ensure that the value is up to the place of importation and it is the sole consideration. To ensure that, we have to add certain expenses and cost. What and to what extent? These two things are answered in rule 10. So what expenses should be added and up to what amount they should be added? This is answered in rule 10. Then rule 11 says that importer should declare what he has to declare: the truth. He has to also declare all the details, whatever is required for valuation. All this is given in rule 11, so it is more of a theoretical. And rule 12 is that point which we discuss above. The officer is given power to reject your value. Now, subject to that new rules, but still officer is having the powers. Rule 13, interestingly, what it says, how to interpret certain terms used in the above rules. So rule 13 is also going to be important when we understand the above rules, how to interpret and apply them. So mainly valuation is given from rule 3 to 9. 3 is your own value, that is transaction value, where more conditions and more pointers are given. Rule 4 to 9 is the other mechanism of finding out the value. Rule 10, very important. What are the additions to be made to the value? Rule 11, importer has to declare certain facts and things. Rule 12, officer still has power to reject. And rule 13 is interpretative rules, that is how to interpret and apply the above rules. So this is the whole structure. We will be going into detail of these rules, but for that you should first know the structure. Now, rule 2, which provides for definition. there are two rules which are mathematical rules. One is the computed method, one is the deductive method. Here in definition, they have not defined anything. They have simply said computed value means value as per this rule, deductive means value as per this rule. So nothing is defined. Definition starts from here. Now, before I go to the definitions, again try to understand the logic of these definitions. Now, what is the logic? See, we are talking about international transaction. Now, please try to understand this point, students. In next 2 to 5 minutes, what I'm explaining, if you understand that, then comprehending the rules, the definitions, which will be much easier and it will be more perfect also. Now, see, when we talk about domestic transactions, like in case of GST, the transaction is happening in India and both the parties, the buyer seller is in India, means the government has full control over that. Control in the sense it can catch hold of the buyer, it can catch hold of the supplier, it can catch hold of the goods when they are being transported, when they are being stored. So government has more control when the transaction is domestic. But when the transaction is international, government has control only to the extent where the transaction's leg is in India. The government has no control on that leg of the transaction and that party to the transaction is outside. So again, in my example, I'm importing machine from a foreign supplier who is in Germany. Government has no control over that German supplier. Government cannot ask that German supplier to do anything. Even if it asks, the German supplier is at his wish to whether listen to our government or not, and practically why he will listen. So government has only chance of taxing it, of valuing it, of controlling it till the time the goods are in India, and secondly on me, who is the importer in India. That's it. So the remaining leg, which is outside India and the person is outside India, government has no control. Now, government cannot make the act very rigid, otherwise the trade will hamper. Like there was a time when there was huge physical control in entire taxation, be it excise, be it customs. Like today also, there is some sort of physical control when you talk about liquor. So if you have any client who is in liquor business, you can just go and ask that client. He will tell you that excise officers, the liquor shops and all have to give daily report to excise officers. To that extent, you have control by the government. But that is obvious because liquor is an intoxicating item. But when we talk about international trade, and today every country, every government is looking at increasing its international trade, which is from all perspective. One is growth and development of your country, your economy. Second, entire international relationship is today linked with trade. Now you'll see in past 6-8 months since all this tariff war and so many things have started. Even if I want to stop some actual war where let us say Ukraine and Russia are fighting, I can use trade as the measure to stop or ask anyone of them to take the back seat. So this is the power of international trade today. So trade today has become a tool to resolve so many conflicts. Coming back to the point. So government cannot put lot of control, lot of restriction on the import export because doing that will hamper the trade. So what the government has done, they have tried to ensure through these rules that we are able to collect proper tax, but at the same time, they are not bringing in the physical control which was there at one point of time. Now, just whatever I have said, it will make sense when we go to respective definitions and respective provisions. Now, we just read in the sequence of rules that we'll first take your own goods value, which is a transaction value. But in case that value fails because something is not present, conditions are not met, or everything is done but the officer rejects because he doubts, in such case we have to find value. Otherwise, we'll not be able to collect tax and the import export will not happen. For that, they have come up with the other rules. What are the other rules? Take value of identical goods, take value of similar goods. But before you understand identical and similar, you have to understand this phrase. What is this phrase? Goods of the same class or kind. Now, this is a very broad phrase. Identical and similar goods are very specific or precise phrases and definitions. But this phrase, that is uh, goods of the same class or kind, this is very broad phrase. What it means? It means that we are talking about a category, like how we say that you are from textile industry. So textile becomes a category. When I say goods of the same class or kind, so let us say I am importing this cloth. This cloth, identical and similar will be same cloth. But when I say goods of same class or category, it means goods of textile industry. It may be even the thread, it may be even the raw cloth, it may be even the unfinished cloth. Every is goods of same class and kind. So when I'm using the phrase goods of same class and kind, it will be the entire textile industry. But when I say identical or similar, it means specifically the same goods which I have imported. See the difference. Now, to that extent, the valuation rules have gone that if I am able to find the exact goods, fine. If not, and still I want the trade to happen and still I want the duty to be collected, let me go to more broader concept or more broader domain. What it will be? Goods of the same class. So what is the definition? Rajesh, can you please read the definition for me? Rajesh is not there. Rajesh, are you there?
Uh, Goods of the same, I should read from there.
Yeah, please.
Goods of the same class or kind means imported goods that are within a group or range of imported goods produced by a particular industry or industrial sector and includes identical goods or similar goods.
So goods of same class kind is at a very broad level. As I said, if I'm talking about this shirt, goods of same class or kind means anything in the entire textile domain, which may be a shirt, which may be a t-shirt, which may be even a raw cloth, not converted into shirt, t-shirt. Everything will be goods of same class or kind. Now we'll go to that level if we are not able to determine value at the precise level. Now, what is the precise level? First, I will take the value of my own shirt, which I've imported. If not, as we saw in the rules, we will try to take the value of same shirt, same brand, same type imported by somebody else. Third, if that is also not possible, I'll try to take the value of shirts, may not be same like mine, but which are shirts only imported by someone. So now we are going to see the difference between the definition of identical and similar goods, because as you saw in the valuation rule summary which we discussed, you first take your own shirt's value. If that is not maintainable, if that is rejected by the officer, then you will try to take the value of the same shirt but imported by somebody else. So same shirt is identical goods, and similar goods is where the same shirt, like let us say this is Van Hussein shirt, and this is a shirt of a particular design type. Same shirt, same Van Hussein shirt of same design imported by someone else is identical goods. If not, then maybe Van Hussein shirt may be of different shape, of different design, or maybe of some other brand like LV or Levi's, any other brand shirt of similar type. So what is identical and similar? The difference is identical is same goods imported by someone else. Similar goods means the goods which may be of a different brand, maybe of some different shape, color, size, but more or less having the same features. So a shirt and shirt is similar. A shirt and t-shirt is never similar. A shirt and t-shirt will fall in this goods of the same class or kind. See the difference. So same shirt imported by someone else, identical. Any other shirt imported by someone else, similar. And t-shirt and shirt, goods of same class and kind. So just try to keep these differences in mind. And let me also inform you, you also have theoretical questions. So in that, these definitions are important. So Rajesh, now you'll first read identical goods and then we'll read similar goods, please.
Identical goods means imported goods which are same in all respects, including physical characteristics, quality, and reputation as the goods being valued, except for minor differences in appearance that do not affect the value of the goods.
So my shirt and same shirt imported by Rajesh may be slightly different in appearance. Like mine is pure white is maybe, let us say, slight cream, but that does not affect the value because shirt, both same brand, everything is same shape, size. In fact, even shape, size, even if it is different, many times you'll find that XL shirt and L shirt has same value. So even that much difference, but of same brand and same shirt only will be identical. So identical means my same goods. What I imported today, Rajesh has also imported. Let us say Ashok ji has also imported. Let us say Swaminathan has also imported. Ayush has also imported. All have imported the same shirt. So what you all have imported is what is identical to my goods. Yes, please proceed.
Produced in the country in which the goods being valued were produced.
So where my goods are, see what is goods being valued? Goods being valued is my goods because you are trying to value my goods. So where my goods are produced in the same country, your goods are also produced. Please.
Produced by the same person who produced the goods or where no such goods are available, goods produced by a different person but shall not include imported goods where engineering, development work, artwork, design work, plan or sketch undertaken in India were completed directly or indirectly by the buyer on these imported goods free of charge or at a reduced cost for use in connection with the production and sale for export of these imported goods.
You can just ignore this part for the time being.
Okay.
So what will be what will be identical goods? Same shirt imported by Rajesh, by Ashok ji, by Ayush, maybe with some change in the size, color, which does not affect the value. Second requirement is this is also manufactured in Japan. His shirt is also manufactured. All your shirts, who all are importing, is manufactured in Japan. Third condition is very rigid by the same person. Same person means the same factory, the same manufacturer, or by any other manufacturer. Now, you all know that nowadays all these branded shirts are not made by the brands. Brands are only marketing it. They get it made on contract basis from somebody else. So either in the factory in which my shirts are made, or it may be even some other. So first preference is the same person means same factory which produce my goods. Your goods are also manufactured in there, or if not available, produced by a different person. That is a different factory. But this should be same. Both are manufactured in the same country. Then my shirt and your shirt is called as identical. This part you all may ignore. This is just a conditional part. Now when we go to similar, similar will mean shirt only. Now let us say if Rajesh or whatever shirts you all have imported, which is identical to mine shirt, is not available. But at this point of time, Sanjay and Geeta have also imported, and even Geet has imported goods. What? Shirt only. But when these shirts are not of same brand, when these shirts are not of same type, but they are different, they may then fall in similar goods definition. So identical goods is same shirt, which is purchased by me, imported by me, and also imported by Rajesh, Ashok ji, Ayush. That is identical. But let us say they have not imported. So identical goods is not available. Then the second is you go to similar goods value. What is similar goods? Please read. Yes, Rajesh, please read.
Means imported goods which, although not like in all respects, have like characteristics and like component materials which enable them to perform the same functions and to be commercially interchangeable with the goods being valued having regard to the quality, reputation and existence of trademark.
Important. So what are similar? Which is not same in all the respects. So maybe that shirt may have slight different other uh, material use. What is very important is even the material may be different. Many times the designs are different. But what is very important is it has the same function and is commercially interchangeable. What is commercially interchangeable? That a buyer, like when you go to buy a shirt, maybe you want to buy the same shirt. But if you're not getting it in the market, you're okay with some other brand, you're okay with some different shape, pattern. That is okay. Slight material change is okay. So where the same shirt is available, it is identical goods. Where a different shirt is available, but which performs the same function and is commercially interchangeable with the goods being valued, having regard to quality, reputation, and existence of trademark. So it is also a branded shirt, but of different shape, different pattern. And again, the other two conditions are same: produced in the same
Produced
country,
in the
produced by
country.
the same person, or by any other person. etc. So that second part of the definition of identical and similar goods is same. What is important is the first part. So what is the difference between identical and similar? I hope you all have understood. Fine. Now we'll take a 10 minutes break. You all can also have some breakfast or something, and we'll reconnect and we'll proceed with the rules. Fine.
Okay, sir.
So 10 to 50 minutes break. identical and similar goods. I think Ayush had asked this. Is there a definition of place of importation? Originally, there was no definition. As you can see, DA, whenever the act has something added later, how it is added? By using a number and an alphabet together, like how in income tax you have section 43A, 44A, 44AD, or you will have alphabets together, like in GST also you have section 16 bracket 2 double A, section 7 bracket 1 CA. So similarly here you have DA. This defines what will be place of importation. Why this is important? Because in the condition itself, we had the requirement that the value should be at the time of importation and at the place of importation. Rajesh, can you please read? Rajesh, are you available, beta?
Place of importation means the customs station where the goods are brought for being cleared for home consumption or for being removed for deposit in a warehouse. Produced includes okay.
No, no, wait. Now, what is place of importation? Now, see, I had explained this giving that example of mine. I'm importing a machine from Germany. It will land at the Bombay port. My factory is in Rajasthan. Now, what is the place of importation? Because our value has to be at the time and at the place of importation. It means the custom station where the goods are brought for being cleared for home consumption or for being removed for deposit in warehouse. In simple words, it is the first port where the goods will land in India. So from there, either they will be cleared for home consumption or from they may even be going to go to be deposited. That makes no difference. Important is it is the place where it is landing for the first time in India. This is what is place of importation. And then other definitions are there. Now we go to the other important definition. This definition, half part is copy paste of GST, half part is similar to GST. The only difference is in the percentages. Please read the definition of related in bracket 2.
Related. Where is it, sir? Relate.
For the purpose of these rules, you have to read
For the
from.
purpose of these rules, persons shall be deemed to be related only if they are officers or directors of one another's businesses. They are legally recognized partners in business. They are employer and employee. Any person directly or indirectly owns, controls, or holds 5% or more of the outstanding voting stock or shares of both of them. One of them directly or indirectly controls the other. Both of them are directly or indirectly controlled by a third person. Together, they directly or indirectly control a third person, or they are members of the same family.
Now, similar definition, if you recall, exists even in GST. What? You are a director officer of one another's business. So company and director, then partner and firm, employer, employee, and then on the basis of either shareholding or on the basis of controlling. So you'll find that majority of the definition in GST of related person over there is copy pasted and borrowed from here itself, right? What else is defined? Please go ahead. Explanation 1 and 2.
The term person also includes legal persons. Explanation 2, persons who are associated in the business of one another, in that one is the sole agent or sole distributor or sole concessionaire, howsoever
Howsoever.
described, howsoever described, of the other shall be deemed to be related for the purpose of these rules if they fall within the criteria of this sub-rule.
Here, this term is important. What they have defined? Person who are associated in the business of one another. Because this is also considered as a related person where they are business associates. But what type of business associate? One is the sole agent, sole distributor, or sole concessionaire. Now, what is this sole? Sole means, let us say I'm Britannia company. Now I have appointed Rajesh as my distributor, sole agent. Means what? Whatever goods I will be selling, everything will be routed through Rajesh only. Normally company do not do this. They have multiple distributors, they have multiple CFAs, uh, sorry, what we say, this clearing agents or their concessionaires. So generally, in reality, you will not find this type of association being there. However, at times, there may be a possibility that in some specific cases, they have specifically kept this. What? That everything which I am going to share, sell, will be only routed through you. In this case, in this case, the definition of related person will cover them. But if there are multiple distributors and all, then the definition does not cover them. So we have to be clear with this point. Now we start with the valuation. Now rule 3 says that value will be your transaction value only, but subject to two things. Rule 12, what was rule 12? Try to recall. It is the power of the officer to reject. Plus you have to also apply rule 10. What is rule 10? You have to make addition for certain cost. And then it has provided for some important conditions. If you remember, section 14 said some more conditions will be provided there. Please read.
Provided that there are no restrictions as to the disposition or use of goods by the buyer other than restrictions which are imposed or required by law or by the public authorities in India, or limit the geographical area in which the goods may be resold, or do not substantially affect the value of the goods. Two, the sale or price is not subject to some condition or consideration for which a value cannot be determined in respect of the goods being valued.
Okay. Now,
No, yeah.
1 second. Now, what are these conditions? So first, rule 3 says the value will be transaction value only. So as I said, even the first rule is dealing with transaction value, first point. But then it says that value of imported goods under sub rule 1, that is transaction value, will be accepted if these conditions are satisfied. So already we had some conditions about buyer seller not related, price is sole consideration, all those were there. These are additional conditions. First is what? That no restriction has been put as to how the goods can be used or disposed by the buyer. Now what does it mean? See, understand this. When we are talking about free trade, free trade is what? I have purchased this machinery from the German supplier. Full stop. Now German supplier should have no control over me as to what I will do of the machine. Whether I'm going to use it, whether I'm going to just keep it, whether I'm going to resell it. He should not put any restriction. Now, why this condition is there? Let us understand the reason logic. Because see, we want to take your value as the customs value for computing customs duty. The basic ideology in all these conditions is I want a fair value. Now, when the value will not be fair, the value will not be fair if one of these things are present. What? There is a restriction. See, whenever the trade is restricted by putting such conditions as to you cannot use the machine like this, you cannot resell the machine, or you will have to compulsorily keep the machine with you for minimum 8 years. If any such conditions are put, this has a direct bearing on the value or price. Since customs want a fair price, or I'll say a regular price, a normal market price can happen only when the transaction is without restriction. So first requirement or additional condition is that there should be no restriction on the buyer as to how the buyer can use the goods or further dispose the goods. However, many times some restrictions are there and which are part and parcel of any transaction. So such restrictions are allowed. So two types of restrictions can be there. We have no problem. One, which are required by law itself. Now, see, many times, like in case of medicines, you'll find, or in case of specific type of electronic gadgets, you'll find that some restrictions are put. Like in case of medicine, these should not be kept in sunlight, or in relation to medicine only. The biggest restriction is on the expiry, that you cannot consume it after expiry. Similarly, in case of food articles, some restrictions about their storage, about their use, or the date is given. Such restrictions obviously will be there on its use or disposal because it is a requirement of some law. Such restrictions are allowed. Second, restriction which limits the geographical area in which the goods may be resold. Why? Because the same foreign exporter may also be selling goods to other people in India. So there should be no conflict between you and that person. So he may put this restriction, ki boss, you can sell it only in the let us say southern part of India, not in the other regions. Why? Because over there I'm having business with somebody else, and some other restrictions such that they have no impact on the value. See, many times there are, I don't know whether you all have read or not, many times on the package of many goods, you'll find a list of conditions given, a list of restrictions given, which has no bearing on the value itself. I'll give you example. Like whenever you buy a particular type of chemical, they will put a restriction that this chemical should not be kept open. Why? Because if you keep it open, the chemical may sublime, it may evaporate, it will be your loss. Or this chemical is highly explosive, so it should not be used in these circumstances. Like even on your deos, it is always recommended that you should never use it near fire. I'm sure you all would have seen those videos where during some birthday party or something, now we have those party sprays. I don't know whether you all know this. They are highly inflammable and it should never be used near fire. Otherwise, there are incidents which are on video, which has been shared on the social media, that you are having that candles, and before the person is going to blow up the candles on his own birthday cake, somebody sprays. But the unfortunate part is the spray is near to the candle fire and actually it catches fire, and people in the party, including the birthday guy himself, caught fire because of that. Same happened in different your marriage parties, because now sprays are common use items in parties. So there are restrictions, but they are not affecting the value. In fact, they are general use restrictions. So such restrictions can be there. But besides these three, if there is any other restriction, transaction value will not be accepted because there is a possibility it is not the normal price. And then second, very important, the price is not subject to conditions for which value cannot be determined. See, all this rule is for valuation. Now you have kept such a price for which valuation itself is not possible. Like I will say that, or the manufacturer says he is exporting this machinery. Against that, he want me to take care of his parents in India for next 2 years. See, consideration can be anything. We can agree anything. Contract law allows everything which is legal and which is logical. Now he says, okay, I don't want anything in money form, but you take care of my parents in India. Or there is some orphanage or old age home, you support them for next 2 years. But he has not quantified it how to support. Now these are values, or these are not values, sorry, these are conditions and considerations for which value cannot be calculated or value cannot be ascertained. Now, if the value cannot be quantified, how will you calculate the value and calculate the duty? So obviously the second condition is that keep such a value which can be quantified, otherwise your transaction value is rejected. Please proceed.
No part of the proceeds of any subsequent resale, disposal, or use of the goods by the buyer will accrue directly or indirectly to the seller unless an appropriate adjustment can be made in accordance with the provisions of Rule 10 of these rules.
Now, third condition is, today the machinery manufacturer says he's charging me 1 lakh USD. Great. But he is also putting a condition that tomorrow, whenever you are going to resell this, you have to give me 20% of your sale price or 50% of your profit. Firstly, condition C says don't put any such condition. What condition? That any future sale proceeds has to be given to the supplier. Firstly, don't put such a condition. But secondly, it says even if you are putting such a condition, please ensure that there are some additions in Rule 10. We are going to see addition for certain costs and services. Please ensure that the condition which you have put should be such that I can make a calculation under Rule 10 so that it can be added. If you have put a condition which cannot be computed and added today, I will reject your. So third condition is that if in future I resell the goods in India, I should either not be required to pay anything to you in future, first requirement, or if I have to pay anything, then that amount is quantifiable, determinable today, so that you can add it as per Rule 10 requirements. Fine. Now, Rajesh, you'll read D, and along with D, you will read 3A, both, because both are connected.
The buyer and the seller are not related, where the buyer and seller are related, that transaction value is acceptable for customs purposes under the provisions of Subrule 3 below. Subrule 3A, where the buyer and the seller are related, the transaction value shall be accepted provided that the examination of the circumstances of the sale of the imported goods indicate that the relationship did not influence the price.
Continue.
B. In a sale between related persons, the transaction value shall be accepted whenever the importer demonstrates that the declared value of the goods being valued closely approximates to one of the following values ascertained at or about the same time. 1. The transaction value of identical goods or of similar goods in sales to unrelated buyers in India. 2. The deductive value for identical goods or similar goods. 3. The computed value for identical goods or similar goods. Provided that in applying the values used for comparison, due account shall be taken of demonstrated difference in commercial levels, quantity levels, adjustments in accordance with the provisions of Rule 10, and cost incurred by the seller in sales in which he and the buyer are not related.
The fourth condition is a repetition of what we studied in section 14 itself. Section 14's last condition was buyer and seller are not related. Now the rule 3 also reiterates the same condition, buyer seller are not related, but not for giving you the condition because that is already given by section 14, rather to create an exception for that condition. So it first reiterates the condition of section 14 saying buyer and seller are not related, but then relaxes this condition. How? Further what it says, even if they are related, the transaction value can still be accepted. So indirectly it is now relaxing the condition, but then asking you to satisfy what is given in subrule 3. And what does subrule 3 says? That even where you, that is the buyer and the seller are related, you as a buyer, that is the importer, should justify to the customs that your relationship has not impacted the price. So even though you are related, the price charged by your seller is normal. See, again, I repeat what custom wants. We want normal market price. We want normal business value. How that will be ensured? For that, all conditions are put. But in this condition, they have relaxed. See, it may happen that you are doing business with your related person. We don't have a problem. We cannot restrict you doing business with your related person. Same as income tax. Section 40 does not say you don't have transaction with your related persons. Only if you are showing abnormal expense, we will disallow only the abnormal part, not the full part. So even income tax says that, okay, in business, you can do business with anyone. So here also we say that you can import goods from your related person, but as an importer, you'll have to prove that the relationship did not affect the price. Now, how you can prove this? That is further given in condition B, which says that you have to demonstrate what? That your declared value, that is the price which you are showing on the invoice, is closely approximating, means it is closely matching. Matching with what? See, if I would have rejected your transaction in rule 3, what does further the law provides? I will go to rule 4, take value of identical goods. I'll go to rule 5, take value of similar goods. Or I will go to rule 7 and 8, take the calculated value by the computed method or by the deductive method. So as a importer, you simply prove to the government what? One, your relationship has no effect on price. How you'll prove this? Demonstrate. See, sir, if even if you reject my price, what you will do? You'll go to identical goods. So I'm giving you the prices of Rajesh, of Ashok ji, of Ayush who have imported the same shirt. See, their price and my price is more or less same with 5-10% difference. Or let us say you don't get the same shirt, but you get a similar shirt which is imported by, let us say, Geet or Geeta and all. See what is their price. See, their price is also near to my price. Then what is the problem? If my price is closely approximating the other values which you would have taken, why not take my value only? So this is what importer has to justify. If he does that, even though importer and the outside seller are related, your transaction value is accepted. And then the other requirement is substitutes values cannot be established under the provisions of clause B. So here, while demonstrating, you cannot take substitutes value, and sub rule 4 says if value cannot be determined as per the above sub rule, that is transaction value cannot be accepted, the value shall be determined by proceeding with rule 4 to 9 sequential. So rule 3, take value of your goods only, which is transaction value, with those conditions, relaxations. If not, then last rule, sub rule 4 of rule 3 says, now you will have to proceed to the other rules in sequence. That is compulsorily you have to apply 4 first, then 5, then 6, then 7, and so on. Now what is 4? Take the value of identical goods. What is 5? Take the value of similar goods. Now interestingly, same thing what is given in 4 is repeated in 5. That is why you'll see nothing in 5 separate. It says, apply the above rule mutatis mutandis. Now the interesting part is, 4 says take value of identical goods, 5 says take value of similar goods. Now logically also, if you have to take the value, you will prefer which value? You will prefer value of the same shirt imported by somebody else. So that is why in sequence, rule 4 says, which is the first rule you have to apply. So firstly, my shirt's value, which is transaction value, rejected. Go to those transactions where Rajesh, Ashokji, Ayush has imported the same shirt from the same person. What values are charged to them? Take that value and apply it for my valuation. But if let us say values of Rajesh or Ayush or Ashokji is not available, or if it is available, it is also not acceptable, then try to find out, if not the same shirt, but same shirt of similar brand or same type of shirt, maybe with different material, different design, which is imported by Geet or Geeta, which is similar goods, take their value. This is what is given in rule 4 and 5. Now, interestingly, what is the point? The point is, where rule 4 says, take the value of identical goods, what it says, but keep in mind all the conditions of section 14. What? The value should be for goods which are sold for export to India. This was our first condition in 14. You cannot take the domestic values. You cannot take the values where the same person has charged to some other country. So you have to take values for import to India or export to India, whatever it is, English usage. So I'm importing, so that person is exporting. Then comes the most important condition, imported at or about the same time. Now, this was our second condition, which I said I'll explain later. Now, what was the condition above in section 14? That the time of importation is very important. So one was place of importation. Place of importation is I want value up to Bombay port. I want the value which is also matching the time of importation. Now, what is this point? This point is relevant. That is the timing point when I am not taking my value. I am taking somebody else's value. Now, Rajesh has imported the same shirt, same, or Ashokji has imported the same shirt, maybe slight change in the size to match their requirement. Or Ayush has imported the same shirt from the same manufacturer, that is, their goods are identical. But when has Rajesh imported? Rajesh has imported this shirt in the month of August. Can I take Rajesh's value? Answer is no. Rule 4 says no. Even though Rajesh has imported same shirt, which is identical goods, which is satisfying the conditions of identical good, I cannot take Rajesh shirt's value because Rajesh import and my import are not at the same time. Then I go to Ayush. Ayush has imported in the month of November only. Let us say first week of November. Can I take Rajesh's value? Answer is yes. Because Rajesh's import is at or about the same time as my import. That is same time with the goods being valued. Which goods? My goods. provided that such transaction value shall not be the value of goods provisionally assessed. Now, there is a concept of provisional assessment. If Ayush's import, when he made in the first week, was valued under section 18, that is provisional assessment, which is anyways not final. So if Ayush's value is not final, how can I take Ayush's value? In that case, even Ayush's value will be rejected, even though he has imported identical goods. But if not, value is acceptable. So what is the condition or requirement? The import of identical goods, that is by other importers of same goods, should be at or about the same time. Fine, I find that. Now I find two. One is of Ayush, one is of Ashokji. Third was of Rajesh, but that is rejected because his import was at a very different time. So I cannot take that. But Ashokji and Ayush are near to my import. See, it need not be the same date. If it's the same date, excellent. But you may not find the same date. That is why they are saying at or about. So it may be near, plus minus. How much plus minus? That you will find they have given up to 90 days. Correct? That will come later, but I'm just informing you for an information. But you should take the most closest one. Now comes the next point. What is the next point? It says while applying this rule, the transaction value of identical goods in a sale at the same commercial level and also substantially the same quantity level should be taken. Now this is interesting. Now first condition was same time. So in that Rajesh's import does not qualify, so his import is outside. Now the import which I am having is of Ashok Ji and of Ayush. Now comes this point. What is same quantity level? You understand. I have imported the shirt in 1 lakh pieces quantity. And Ayush has imported the same shirt in 1000 pieces quantity. So Ayush's import is 1000 pieces. My import is 1 lakh pieces. Now, applying the second condition, Ayush's import will also be rejected. Why? Because it is not substantially in the same quantity. Now, I'm sure you all are understanding why these conditions are relevant. First, why of timing? Because I want price of my goods. My goods rejected, so I'm taking other people's transaction. But then, if it is not at the same time, you all know that prices fluctuate. So I cannot take that value which is very far off from my transaction. So timing is important. Similarly, if my quantity is 1 lakh and Ayush's quantity is 1000, again the value of Ayush may not match my transaction. Why? Because we all know,
Discount.
yes, discount is there, other terms are there. So see, understand, see, you all can read these conditions yourself. I am trying to give you the logic so that understanding, remembering, and even reproducing in exams will be easy. In fact, you have to give the same examples when asked. So Ayush's quantity is 1000, my quantity is 1 lakh, rejected. Now the only transaction left is of Ashok Ji. I am applying one more condition. It says at the same commercial level. What is commercial level? See, I have imported this 1 lakh units. Ashok Ji also is importing 1 lakh units. So quantity is now matching in this transaction. But I am importing as a distributor. Ashok Ji is importing as a retailer. Now our transactions are at different commercial level. And again, you will agree that price charged by wholesaler to retailer and price charged by manufacturer to distributor cannot be the same. There will be huge gap. Now, if my transaction and Ashok Ji's transaction is not at the same commercial level, you cannot take Ashok Ji's price for my valuation because the answer will be wrong. So the second condition is that when you are taking some other person's transaction, his goods and your goods are identical, same to same goods, but same time import should happen and it should be at the same commercial level and in substantially the same quantity level. Now, because of this, all these transactions can be rejected. However, there is a savior clause in clause C. Yes, Rajesh, can you please read?
Where no sale referred to in clause B of subrule 1 is found, the transaction value of identical goods sold at a different commercial level or in different quantities or both, adjusted to take account of the difference attributable to commercial level or to the quantity or both, shall be used provided that such adjustment shall be made on the basis of demonstrated evidence which clearly establishes the reasonableness and accuracy of the adjustments, whether such adjustment leads to an increase or decrease in the value.
Now, C is the savior clause. A and B required that it should be at same time and same quantity commercial level. Now C relaxes the B condition that obviously your first preference should be same quantity level, same commercial level. But as I said, I found two transactions which are near my transaction. So timing is matching, but it is not matching with Ayush in terms of quantity and with Ashokji in terms of commercial level. C says what? No problem. You can still take their values, Ayush's value or Ashokji's value. But after making adjustment, so I take Ayush's value. Now Ayush's quantity is 1000, mine is 1 lakh. So definitely what I have to do in Ayush's value, I have to make adjustment for the quantity difference. And what would be that adjustment? It has to lower my price because my price definitely because of higher quantity will be enjoying discount. So I should adjust. If I take Ayush's value, I have to adjust his value by reducing. How? By taking data which is having demonstrated evidence. So I cannot do it vaguely. I cannot do it on assumption basis. There should be demonstrated evidence. What can be the demonstrated evidence? We can have price list that for 1 lakh, the discount is 20% and for 1000, the discount is 2%. So it means I have to adjust for more 18% discount. And if this can be demonstrated through evidence, through proper price list, which is acceptable, and we know that internationally this is the price always for a distributor, for wholesaler, or for quantity differences, then I can take Ashokji's transaction or I can take Ayush's transaction and adjust it. The law has no problem whether this leads to increase or decrease, so law is impartial in that. Further, what does subrule 2 say? Subrule 2 says that it may happen that, let us say, I find one more transaction, let us say, which is of Sanjay. Sanjay's transaction is matching with my transaction. Firstly, it is of identical goods and it is in same quantity, same commercial, everything is same. But there is only one difference. My import is by sea route. Sanjay's import is by air route. Or my import is at Bombay port. Sanjay's import is at Kolkata port. Other things, everything is same. Timing is same, quantity, commercial, everything is same. But there is a difference for this. Now for this, what does subrule 2 says? Please read.
Where the costs and charges referred to in subrule 2 of rule 10 of these rules are included in the transaction value of identical goods, an adjustment shall be made if there are significant differences in such costs and charges between the goods being valued and the identical goods in question arising from differences in distances and means of transport.
So we are yet to study rule 10, which is a very important rule, which requires you to make additions for certain expenses and costs. And that obviously includes the transportation also. Now, if I am finding a transaction, which in my example is of Sanjay's import, which is of identical goods, which is everything same. The only difference is mine is by sea, he is by air. Mine is at Mumbai, he's at Kolkata. Law says no problem. Take their value. Only do adjustment for what? For the differences in distance and for differences in means of transport. So what I will do in this case, I will take Sanjay's value, and in Sanjay's value, I will subtract the transportation cost of air and add the transportation cost of sea. Secondly, Sanjay's transportation cost may also differ because his transportation is up to Kolkata. I want up to Mumbai. So while making the change, I will also make the change for difference in distance and for the difference in means of transport. And by doing this change, and obviously this change also has to be basis proper demonstrated evidences. If I do that, then I will take Sanjay's value finally. And then subrule 3 says, let us say
In,
all your values are acceptable. Rajesh value, Sanjay value, everyone's is acceptable. Why? Because it is matching all those conditions. Now, if I have more than one values, what to be done? Please read.
in applying this rule, if more than one transaction value of identical goods is found, the lowest such value shall be used to determine the value of imported goods.
So the law is kind
Trans-
here. The law
yeah.
is kind here. It says that if by chance you find more than one value, which is matching the above condition. So now I'm changing the example. Let us say all these values, Ashok's value, Rajesh, Ayush, Sanjay, everybody's value is satisfying all the above conditions. But their values are different. Possible because see, it is business. Same supplier supplying to different persons, maybe in same quantity, same commercial, may have different terms. If I have multiple values, then out of that, I will select whichever is the lowest. Now, Ayush has some questions, sir. Sole importer would be covered or not? Yes. So when you were reading the definition of that associated person, and in that they said sole concessionaire, vagara. So when the importer is the sole concessionaire, where the importer is the sole distributor of that supplier, so obviously he would be the sole importer also. So the condition will be satisfied, and you become related person because you are associated. Next question of Ayush only, sir, from where such data is available? See, Ayush, all this data is available because in international market, see, simple. Today, even in domestic market, this has happened that everything, the prices and all is on the portal. And anybody who is buying will come and book from the portal. So the price is unchanged. So all this data will be available from the supplier's portal. So what as an importer I have to do? Let us say I have to take any of your values, but with some changes. So how I will prove to the officer, ki, sir, what changes are to be done? I will say, sir, you want demonstrated evidence? Simply do one thing. You go to supplier's website. You click over there. There are different options given. First, for export to India, for export to Bangladesh, Sri Lanka, and all. You can see their prices anyways, but that is not accepted by law. So you click on India. Within India, he has given so many options. If this is the quantity, this is the price. If this is the quantity, this is the price. Then where you are dealing with him as a wholesaler, he has a different price, and if you are dealing with him as a retailer, he has a different price. So all this is demonstrated either on his website, or the second place from where you can get the data is where I have so many importers. Everybody has signed a contract. You can take everybody's contract copy and you can check. From there, you will get the evidence and the data. Correct? So, this is how Rule 4 is drafted. So, here it is given in the concise form that these are the all conditions, and then how these conditions can be adapted, adjusted, that is also given over here. I hope this is understood by everyone how Rule 4 has to be applied. Once you understand Rule 4, Rule 5 is nothing. It says that where you do not find identical goods value, the second option is you take similar goods value, and while doing so, you apply all the clauses that you studied above. Every clause of Rule 4 you will apply over here, mutatis mutandis. Mutatis mutandis means same with change or necessary adaptation. What is this? Above you were reading all the provisions with respect to identical goods. Now you read the same provisions with respect to similar goods. Is this fine with all?
Yeah.
Okay. Now, interestingly, before we proceed, we'll go to Rule 13. What was there in Rule 13, students? It was rules for interpretation. Now, why we are going to interpretative notes? Rule 13, it says, the interpretative notes specified in the schedule to these rules shall apply for interpreting these rules. Now, there are some interpretative notes given, and Rule 13 says, while interpreting above rules, you apply these interpretative notes. Now, where I am using these notes, where I was reading above rules, there were certain terms which were used in the above rules. To understand those terms, I come to these interpretative notes. So, first, we saw the definition. In definition, they had used a term where one person controls the another. Now, what that means, they say, for the purpose of these rules, one person shall be deemed to be controlling another when the former is legally or operationally in a position to exercise restraint or direction over the other. So when we'll say that one person can control the other, so that is explained in these interpretative notes. It says that one person is in such a legal position or is in such a operational position. Operational position means you are in the board of directors, so you are in the operational position. Legal position is you are the shareholder, or let us say in case of a government company you are some person who is given power legally. So where you are in such a legal or operational position, what that you can exercise restraint or direction. So either you can restrain someone from doing something, or you can direct, okay, you do it this way and that person has to do. Then it is said that you control that person. Secondly, what is price paid or payable? I've already discussed this. Price paid or payable means whatever is the total amount which is part of our negotiation and discussion. So this you can read yourself what it means. Now I'm more interested in interpretations given for rule 3, that is for accepting your transaction value, and interpretation given for rule 4 and 5, which we just studied, that is for identical and similar goods. So Rajesh, start reading from interpretation for rule 3.
Rule 32A3. Among restrictions which would not render a price actually paid or payable unacceptable are restrictions which do not substantially affect the value of the goods. An example of such restrictions would be the case where a seller requires a buyer of automobiles not to sell or exhibit them prior to a fixed date, which represents the beginning of a model year.
Now, we had studied one of these conditions above, that your transaction value will be accepted if there are no restrictions. But in that, we had an exception which said that restrictions which do not affect the value are allowed. Now, they are giving you example of this. Now, many times, I don't know whether you all have seen this. On road, you will find some vehicle going, but it is covered. Have you all seen that? A vehicle on the road is covered with some cloth or with some stickers. Have you all seen that?
Yes, yes.
Yes, sir.
What is that? See, many times what is happening, let us say I am the Range Rover company. Now, a new model has to be launched. But before that, either some testing has to be done by driving the vehicle on the road, or it has to be taken from one place to another. And I find it convenient to take it by driving itself. But I have not yet launched the model. So I cannot disclose the design, the color, and the aesthetics. So what I do, the vehicle is actually moving because it is going from one place to another, but it is covered with stickers, or it is covered with some type of covering of a cloth, so that the model is not displayed. Now, what the company is doing, before launching, let us say it has decided to sell 10 of these vehicles to 10 celebrities so that they can also participate in the launch event. But they have requested, or not requested, rather put a condition that before my launch date, which I am planning, let us say on 20th of November, no one of you will drive this vehicle on the road. And if by chance you are driving, the vehicle has to be covered. So they are explaining in this interpretative note that such type of restrictions are allowed, that you will not exhibit them prior to the fixed date, which is the launch date. So that obviously before launch, if the vehicle is on the road, then the launch will have no meaning. So this is an example given in the interpretative rules. Next.
Rule 32B. If the sale or price is subject to some condition or consideration for which a value cannot be determined with respect to the goods being valued, the transaction value shall not be acceptable for customs purposes. Some examples of this include: the seller establishes the price of the imported goods on condition that the buyer will also buy other goods in specified quantities. The price of the imported goods is dependent upon the price or prices at which the buyer of the imported goods sells other goods to the seller of the imported goods. C. The price is established on the basis of a form of payment extraneous to the imported goods, such as where the imported goods are semi-finished goods which have been provided by the seller on condition that he will receive a specified quantity of the finished goods.
Okay. So what is this interpretative rule dealing with? So we had one more condition, that you should not put such a condition for which valuation cannot be done. For which I gave you example that you are asking me to take care of the parents for next 2 years. Similarly, here in the interpretative notes, they have given you some real life business restrictions as to what type of restrictions, if put, will make your value not acceptable. Why? because for these cases, it will be difficult to value. And since it is difficult to value in all these examples or cases, then obviously valuation cannot be done and your value, transaction value will be rejected. Now, this third part is, if you remember, the condition was that the buyer seller is not related, but if related, then the importer has to demonstrate that our relationship has not influenced the price. And for this, he has to match his price with the other valuation rule prices. How that is to be done? Interpretation rules, please.
Rule 33. Rule 33A and Rule 33B provide different means of establishing the acceptability of a transaction value. Rule 33A provides that where the buyer and the seller are related, the circumstances surrounding the sale shall be examined and the transaction value shall be accepted as the value of the imported goods, provided that the relationship did not influence the price. It is not intended that there should be an examination of the circumstances in all cases where the buyer and the seller are related. Such examination will only be required where there are doubts about the acceptability of the price. Where the proper officer of the customs has no doubts about the acceptability of the price, it should be accepted without requesting further information from the importer. For example, the proper officer of customs may have previously examined the relationship, or he may already have detailed information concerning the buyer and the seller and may already be satisfied from such examination or information that the relationship did not influence the price. Where the proper officer of customs is unable to accept the transaction value without further inquiry, he should give the importer an opportunity to supply such further detailed information as may be necessary to enable him to examine the circumstances surrounding the sale. In this context, the proper officer of customs should be prepared to examine relevant aspects of the transaction, including the way in which the buyer and the seller organize their commercial relations and the way in which the price in question was arrived at, in order to determine whether the relationship influenced the price. Where it can be shown that the buyer and the seller, although related under the provisions of Rule 22, buy from and sell to each other as if they were not related, this would demonstrate that the price had not been influenced by the relationship. As an example of this, if the price had been settled in a manner consistent with the normal pricing practices of the industry in question, or with the way the seller settles prices for sales to buyers who are not related to him, this would demonstrate that the price had not. Can you please scroll down?
It is fine. So what is explained here is, in first part, they are saying that every time the custom officer need not check. When he will not check, if he has already checked your relationship in the previous consignment and it was proved by you that relationship did not affect price, the officer will not do it again. And then the second part, again, they are trying to explain if he has to check, how the inquiry will be made. So this is how the interpretative rules have clarified relating to the transaction with related person. Now we proceed. Read Rule 33B interpretation. Rajesh.
A number of factors must be taken into consideration in determining whether one value closely approximates to another value. These factors include the nature of the imported goods, the nature of the industry itself, the season in which the goods are imported, and whether the differences in values is commercially significant. Since these factors may vary from case to case, it would be impossible to apply a uniform standard to such as a fixed percentage in each case. For example, a small difference in value in a case involving one type of goods could be unacceptable, while a large difference in a case involving another type of goods might be acceptable in determining whether the transaction value closely approximates to the test value set forth in Rule 33B.
So again, in that same condition that buyer seller are not related, and if related, the importer demonstrates that the value which is adopted by importer closely approximates the value which you will get from the other rules like identical similar goods. Now this word closely approximates has been clarified in this interpretative rule, saying that what could be, see, closely approximate means what? Definitely you will not find exactly the same value. The value will have some difference, but what difference will be called as close approximation may vary from case to case. So where there is a difference of 2 to 5%, whether that is closely approximate, or even difference up to 10 to 20% is close approximation, they say that we cannot give you a standard rule for this. So that will change from situation to situation. In some case, even 2 to 5%, which appears to be small, may not be acceptable. And in some case, even 10 to 20%, which appears to be a huge difference, may be acceptable. Again, I'll give you income tax example. We have section 43 CA and 50C, which says that whenever you are valuing land building, if the difference between the stamp duty value and your value is up to 10%, we will accept. Let me tell you, there was a point of time when even up to 20% value was acceptable. So this is that range which the law has given. At one time it was 20, now they have brought it to 10. Similarly in GST, if you are following GST for past 2-3 years, you'll find that there was a time in GST before 1st January 2022, starting even from 2019 to 2022, there was this period where they said that the difference between your GSTR 2A and 3B up to 20% is allowed. Then they reduce it to 10%. Then they reduce it to 5%. From 1st January 22, they have made it zero. Means what? The law many times provide up to what range of difference is acceptable to them. But here they are clarifying that we are not fixing any range, because see, again, imports or international transaction is very, very wide. It is widespread in terms of the nature of goods, and it is widespread in terms of the terms of transactions. So they are saying that is kept open for the officer to decide, and it will vary from case to case. Now we come to notes relating to rule 4 and 5. 4 was taking value of identical goods. 5 is taking value of similar goods. Please read.
In applying Rule 4, the proper officer of customs shall, wherever possible, use a sale of identical goods at the same commercial level and in substantially the same quantities as the goods being valued. Where no such sale is found, a sale of identical goods that takes place under any one of the following three conditions may be used. Valuation,
That is the heading of the
valuation
chapter.
under the custom. Yeah, okay, fine. A sale at the same commercial level but in different quantities, or a sale at a different commercial level but in substantially the same quantities, or a sale at a different commercial level and in different quantities. Having found a sale under any one of these three conditions, adjustments will then be made as the case may be for quantity factors only, commercial level factors only, or both commercial and level and quantity factors. For the purpose of Rule 4, the transaction value of identical imported goods means a value adjusted as provided for in Rule 4.1b and C and for Rule 4.2, which has already been accepted under Rule 3.
So if you remember,
A
we just
condition,
studied that you take the value of identical goods, which is same in all respect. But in case if there is a difference in one of the aspects, which may be quantity, commercial, or both, you have to make proper adjustment. And how to make adjustment, I already explained that you will take the price list and you'll adjust the discount, etc. Go to rule 5.
in applying Rule 5, the proper officer of customs shall, wherever possible, use a sale of similar goods at the same commercial level and in substantially the same quantities as the goods being valued. For the purpose of Rule 5, the transaction value of similar imported goods means the value of imported goods adjusted as provided for in Rule 5.2, which has already been accepted under Rule 3.
Fine.
All of the provisions contained in.
Just give me a minute. Just. Yeah, sorry. Continue.
All other provisions contained in Note to Rule 4 shall mutatis mutandis also apply in respect of similar goods.
So anyways, rule 5 was nothing different. It simply said that the same conditions and the same relaxations which were there for identical goods shall also continue for similar goods. So same thing is there. Now we go to rule 6. So after going through the interpretative rules, let us come back to the main rules. Now we studied that if your transaction value fails, you have to apply the further rules in a sequence. However, Rule 6 changes this. What Rule 6 says that after you have tested Rule 3, which is transaction value of my own goods, Rule 4, transaction value of similar goods, Rule 5, transaction value of identical goods, and if none of these are acceptable for different reasons, then
Yeah.
next two rules you can change the sequence. Remember, both the next two rules are mathematical rules, so they are allowing you to change the sequence. Please read.
If the value of the imported goods cannot be determined under the provisions of Rule 3, 4, and 5, the value shall be determined under the provisions of Rule 7, or when the value cannot be determined under that rule, under Rule 8, provided that at the request of the importer and with the approval of the proper officer, the order of application of Rules 7 and 8 shall be reversed.
Simple. So here they have broken the sequence rule where they have said that anyways now both the other two rules are artificial. Why I'm saying artificial? Because both are mathematical. See, first three rules, my value or Rajesh's transaction value or Geet and Geeta's transaction value, they were actually real market prices. My value, identical value, similar value. They were real market prices. But if none of these rules are acceptable for varied reasons. Now, the law has provided two artificial methods, which is mathematical methods. Now, since both are artificial, the law allows importer to request to the officer that, sir, you change the sequence. Change the sequence means instead of first taking deductive, allow me to take computed. Now, when the officer will accept this request, where the importer makes this request with a proof why I do not want 7 and why I want 8 first, because maybe importer has better data for 8. Because see, for 7 and 8, which is mathematical, you will require lot of data, real data again, or data which can be proven through evidence. Now here, if the importer can explain, sir, see, the data required for 7 is not available with me, but I have data for 8, so allow me to use 8. Why wasting time in first checking 7, rejecting it, and then going to 8? And if satisfied, the custom officer will allow you to change the sequence. Now let us understand what are these two rules saying. Again, it is interesting. See, both are mathematics. First rule is called as deductive. I call it as the reverse calculation so that you'll understand. And eighth rule, which is called as computative, I call it as the forward calculation. What is reverse calculation and what is forward calculation? Let us understand. Now, what does Rule 7 says, which is called as deductive value? So, I imported this machine, or let us say again, coming back to my shirts example, I have imported these shirts. Now, my value, Rajesh's value, Geet's value, everything is rejected. So, Rule 3, 4, 5 fail. So, what does the law says? Okay, Vishal, what are you going to do of these shirts? I'll say, sir, I am a importer who is going to then sell this in market because I am a trader. So the law says best. So what you will do is you are going to further sell these goods in Indian market. So let us do one thing. Let us wait. Wait for what? For me to sell these goods in market. Or if let us say, since I am a regular trader, I have been importing this earlier also. So earlier consignment I may have sold somewhere near to today's date when this present consignment has come. What this rule says, take the final sale price at which I have sold in the Indian market, and that transaction has to be such where the person to whom I have sold is not a related person. For the same reason, if I'm selling in Indian market to a related person, maybe that price may not be acceptable. So it means in the Indian market, my sale is at a fair value. Interestingly, that price at which I have sold these goods in the Indian market, that price is the starting point. Now from that price, do reverse working. What is reverse working? Please understand, section 14 said, I want the value at the place of importation. And also section 14 says, you should take the price which is in the international market and not the domestic price. But I'm starting with a domestic price, that is the price at which after importation I've sold the goods in India. And I will start reducing, I will come backward to reach the price which should have been at the time of and place of importation. Now what I will reduce? Apply your logic. I will reduce what I add after importation to reach my Indian selling price. Please understand this. See, if you understand logic, understanding the rule language is very simple. So, rule 7 is I cannot find this price. No problem, take this price. So, what I did after importing, I added some of my cost and I added my profit margin. This made up my final price of selling these goods in India. Now you are taking that price at the starting point. So do reverse calculation. You deduct. What you deduct? All these things you added after import. Now what all things I added after import? First is my commission or profit margin. Actually, it is profit margin, but they are also using the word commission and the general expenses. So logically, everybody adds some portion of their common cost overheads plus the profit margin. Reduce that. Also, what I would have added after importation, I would have incurred costs for its transport, insurance, associated costs is warehousing, loading, unloading. Because after import, till the goods are sent to the Indian markets, I would have incurred these costs and I would have added. And most important, what else I would have added? I would have added my customs duties because obviously I would have paid the custom duty or I have to pay the custom duty to clear these goods. So the simple logic is I want the price at the time and place of import. But in that, I have incurred some cost. What are those costs after import? Import duty and other duties, plus the transportation, warehousing, storage, and eventually my business cost I would have appropriated, that is overheads I would have added, plus my profit margin. You reduce all this, mathematically you will reach the value at the time and place of import. I hope this rule is clear. So that is why I call this as reverse calculation, right?
Yeah.
Now parallelly, let us understand 8 also. 8 I will say forward calculation or I will give another word, cost sheet. Now what does this rule says? If I can get the data as to how the supplier of this shirts has valued it, I will use his data. For this, what data I will require? I will require his cost sheet data, which will include the value of materials which he has used. Then after that, for manufacturing the shirt, he would have incurred the manufacturing cost, fabrication costs, or other processing costs which the person would have applied for making these manufactured goods. And plus, again, that person would have added his profit and his expenses. So now let me do a forward working, or I'll say cost sheet. So how in cost sheet you take raw material, direct labor, direct expense, prime cost, factory overheads, factory cost, administration overheads, cost of production, selling overheads, total cost, and profit margin to find out selling price. This you do it by taking the data of the manufacturer. And obviously to that, add all those costs that you add as per rule 10, because that anyways we are going to add. So again, by the forward calculation or by the cost sheet method, you will come to the value of these goods at the time and place of importation. So this is the forward calculation, cost sheet method. So when real prices, which were in real 3, 4, 5 fails, you go by the artificial price. See, artificial does not mean artificial completely. It is backed by the data and evidence, but it is the price which is derived by some mathematics. Students, I hope both these methods are clear, deductive and computed. Yes, students?
Yes. Yes, sir. But then will any of the manufacturer will be willing to give this computed value?
See, that is why they have given you the choice of interchanging.
Okay, fine, reverse. Okay.
So it depends upon the availability. And anyways, if it is not there, if all this fails, you have rule 9.
Fine. Okay.
Correct. So see, that is, see, understand, visualize this. Your point is very perfect. Why a foreigner? Forget about foreigner. Why even a domestic manufacturer will disclose? Because I am his customer. Once I know his costing, I can bargain next time to reduce. Obviously.
Exactly.
See, here they are taking a chance with that scenario where the person sitting outside is you only. Who is you? It is your own unit outside. Correct?
Okay.
So
Yeah.
they can force you to give you the cost sheet and maybe certified by the cost accountant over there. See, that is why sequentially the law has put it as last, because they also know doing valuation by this is the least possible. So in their sequence, they have kept it last, right?
Oh, right, sir.
So that is how rules 7 and 8 are designed. So we stop over here. I'll request you all to please read all these rules again. You may not read the section, we have dealt with the section in complete detail. You read these rules, and most important, along with this, read the interpretative notes to each rule, so that whatever is given in these rules, I have explained that all, but it will help you understand them better. And most important, though we have not covered it today, rule 10, because it is the most important rule which is required when we are doing the practical sums, because besides the price given by the supplier, we have to compulsorily add few expenses and costs. So please read this rule also, and obviously the associated interpretative rules. Next lecture, we will brush up this. We will read rule 10 in detail with the interpretative rules again in the class, and we will solve some practical questions. But if you all come this rule read, it will save our time in the class, and also you will understand and enjoy the law. Is this fine, students?
Yes, sir. Perfect.
Yes, sir. Yes.
So I hope you all understood things with more clarity, with more depth, which is required at the finals level, so that not only you are able to crack your exams, but also you are able to expertise in the subject, so that in case you aspire to take up these subjects as your career, as your profession, I'm sure whatever we are discussing in these sessions, where I'm trying to give you the logics or the backdrops of every rule, every topic, that will help you a lot in your practice. So please try to make a note of all these pointers and also keep revising. Thank you.
Thank you, sir.
We connect
Thank
in
you.
the
Thank you,
next
sir.
second part of this chapter.
Thank you so much, sir.
Good day. Happy Sunday to all.
Happy Sunday.
Bye.
Bye, sir.
Yes, Ashok ji. Thank you very much. Good day, Ashok ji. Same.